Does gold go up on the weekend? A really interesting piece here around weekend trading, weekend risk and fear that we'll see a lot of times going into a weekend when stocks are closed, futures are closed, Forex is closed, gold trading essentially is closed, especially in light of all the news that we're seeing out of the Middle East. Of course, before that, there was all the economic slowdown news out of China and the Eurozone, always news. And especially when that news is inspiring some overwhelming fear in the market, gold prices tend to move higher on some of that fear. But a lot of people, going into a weekend when there's 2 days of news risk and markets aren't open, might look at buying gold to be like, oh man, well, if something happens over the weekend, I own some gold and I'm hedged if I also own stocks and other risk on assets. And so I wanted to take a look at some historical performance of gold around the weekend to see if there's is that a good strategy? Is there a reason to buy gold going into the weekend, or is it priced in? And maybe gold runs up going into the weekend and deflates a little bit on Sunday night's open and Monday when the greater stock market opens. But first, let's take a look at gold because it's been very volatile the last several weeks here, as for a little bit of time going into Israel declaring war on Hamas, this market fell from 1950 down below 1850 really quickly. And for a second there, questions started rising. Is gold going to return to closer to 1,500 than it is to 2K, where it's traded for a good portion of this year? Bounces all the way back amid the geopolitical risk entering over the course of the last week or two, got above 1900, and now is trading in that 1900 to 1950 range. And just as a quick aside, and this is now going back the last few years, of course, it's not one for one. I mean, first of all, fear is an emotion that you can't really quantify. But historically speaking, as fear rises, gold prices tend to rise. But also, and this is the underrated piece, and this is what we're going to explore today, is fear leaves the collective mind, the marketplace. Gold prices also tend to move lower. And we have a couple of really solid examples over the course of the last 3+ years. You have the pandemic of early 2020, gold prices going from around $1,500 to start that year, rising all the way north of $2,000 for the first time in a while. I don't have the exact date, but I'm pretty sure it was the first time in at least a handful of years we got all the way above $2,000. But then remember, it's not necessarily that the pandemic went away in the middle part of 2020, but the stock market bounced back. The central bank and the government came in and they promoted a lot of economic expansionary policy, and a lot of fear left the market. The pandemic didn't go away, but the fear around a lot of the pandemic and how it might hamper the economy went away. You'll remember Apple and a bunch of tech stocks, by the end of the year, we're back to all-time highs. And you saw the price of gold fall from $2,000 all the way down to $1,700. Fast forward to the early part of 2022, and you have inflation risk starting to circulate. And this is before the Fed hiked interest rates to where they are now, north of 5%. And there's a bunch of fear of, wow, this inflation is out of control. Is it going to stop at 8 or 9%, or is it going to get to the teens? Is it going to get to 15, 16, 17%? Hyperinflation fear was on the table there. Interest rates rose. Some of that fear came back in line by the end of 2022 and especially the start of 2023. Fear had left the market around that event. Gold prices back down under $1,700. And then most recently, maybe not as bombastic of a story, but you saw the regional banking crisis around March of this year. Gold rises again north of $2,000, and it's given away some ground. And that brings us to the present and all the geopolitical risk and so much news coming out across the globe recently affecting gold prices. And so I wanted to see, around the weekend, when you have these 2 days of event risk, and no real market to access your stocks and everything else, does fear tend to rise and fall on this schedule? Is your kind of is my animalistic mind, my fear of like, oh man, it's Friday afternoon, maybe there's not so many news stories, but on Saturday and Sunday there could be some news stories and I have nothing that I can do, so maybe I'll look at buying some gold or buying some kind of insurance, so to speak, against that news coming out of the weekend. Is that warranted, or how has gold tended to act from Friday's close to Sunday night's open, from Friday's close until Monday's close, and then on any day that isn't the weekend there, essentially a normal day? How does this stack up to that as a benchmark? And I kind of thought that this was going to play out the way that it did, but I was interested to see that the results are, one, not super clear, which is to say that markets are random, and almost any period is going to be pretty efficiently random, which is to say pretty close to 50-50 and no real edge one way or the other. But you did see some results, especially relative to the average day in gold, which is that non-Monday close there at the bottom, where gold moves higher 49.7% of the time. So essentially 50-50, and moves higher by about half a tenth of a percentage point, so 0.05%, which doesn't seem like a lot, but keep that in mind as the benchmark. And you can see here on Sunday night's open, tends to move higher only 44% of the time. And you can see the average move is less than half of its normal day. And then by Monday's close, you can see that the average move is actually negative. And so this idea of getting ahead of potential weekend fear, the results here historically telling you that a lot of people maybe have that idea and there's a premium in gold going into the weekend. And then by the time Sunday night and especially Monday come along, there's usually not as much news or potential for fear as actually plays out in the market. And you might say, okay, well, this is pretty marginal, but it at least tells you that if the results were, gold tends to move higher on any given day, 50% of the time, and its average move is essentially unchanged. It doesn't really have a lean one way or the other. But on Sunday night, it tends to open, a tenth of a percent or 0.2 of a percentage point higher. That would mean that, fear comes into the market over the weekend. Here, not telling you that, and then actually compared to the average case, gold performing worse. And so I wanted to look at stocks and see if there's a similar trend, because a similar trend would mean over the weekend, fear tending to come out of the market on average. Stocks may be performing good on Sunday night's open or by Monday night's close, as stocks are kind of the antithesis of a gold or bond market of flight to quality. They're an anti-fear market. They perform well when fear is coming out of the market. And we actually did see this, especially comparing over the last year here, which is the data that we've put together for both cases, gold and the S&P. You look at the average day, the non-Monday close there at the bottom, around 50-50, and the average day being 0.05 of a percentage point, half a tenth of a percentage point higher. You look at Monday's close, and the average Monday, the stock market was up almost more than two thirds of the time, 67%. And the average Monday close compared to other days of the week was positive 0.14%, almost a tripling of the average day there, which again isn't telling you that stocks necessarily do especially good on Mondays. They really like Mondays, but going into the weekend, maybe a little bit extra fear priced into that stock market, as people want to lighten up positions going into that weekend to avoid the event risk. But it looks like the event risk over the weekend looks like your normal day risk. So does gold go up on the weekend? Not seeing any data substantiate it, actually seeing some data to go against that idea, as they build in a little bit of premium in gold and take out a little bit of premium in stocks, historically speaking, going into the weekend.